Starbucks is backed. They just reported their quarterly earnings, and the sales bleeding has finally stopped. This is a massive win for the company's multi-year turnaround plan. For the first time in nearly 2 years, 7 quarters to be exact, Starbucks delivered positive worldwide sales growth. Global sales rose by 1%. Total revenue crushed expectations, hitting $9.6 billion. Wall Street was only expecting approximately $9.3 billion. That 5% sales jump over last year sent the stock higher, rising approximately 2% right after the announcement. Investors are breathing a sigh of relief. Here in the United States, sales at established stores were flat for the full quarter. That is a huge step up from last quarter, where those sales fell by 2%. Crucially, U.S. same-store sales flipped positive in September, and that momentum continued. That shows the fix is starting to work, where it matters most, at home. The real hero was international business, which saw sales growth of 3%. Even China, a major struggle spot, posted a 2% sales gain, boosted by a 9% surge in customer visits. CEO Brian Nichols says his strategy, called Back to Starbucks, is taking hold. This plan is focused completely on customer service and store efficiency. Starbucks is spending big money to staff stores better and adjust operations, calling it the Green Apron Service Model. They use new software to cut down on wait times. Nichols says 80% of company stores now get orders out in 4 minutes or less, even on high-volume days, like the fall menu launch. But all these fixes cost huge money, and profit took a major hit. The company reported a shocking 85% drop in its raw profit compared to last year. Adjusted earnings came in at 52 cents per share, missing the Wall Street expectation of 55 cents. To streamline the business, Starbucks closed 627 stores, with over 90% of those right here in North America. They also laid off 900 non-retail employees. These restructuring charges weighed heavily on the results. Looking ahead, management expects profit margins to rebuild next year as the store closures and cost controls kick in. They also promise to keep price increases strategic and targeted, not broadly raising menu prices, even with coffee bean costs soaring. This turnaround is gaining traction, but management warns that recovery won't be a straight line. Investors need to watch for consistent sales growth and improved profit margins over the next year. That is the bottom line on Starbucks' latest report. If you want to stay ahead of the market and get these raw, honest takes, make sure you hit that like button, subscribe to the channel, and ring the bell for notifications. I will see you in the next one.